A much-needed Christmas gift for all Americans. The White House promising major economic growth in the new year and more money directly into people's pockets. Who wouldn't want that? Welcome to the Big Money Show. I'm Jackie DeAngelis, along with my co-hosts Lydia Hu, Taylor Riggs, Lou Bassanese, and with us for the hour, Fox News contributor David Webb. So we're looking at gas prices dropping to four-year lows as millions of people are hitting the roads for the holidays. This is also coming as the U.S. economy rises at the strongest pace in 2 years. The S&P 500 hit an intraday record high. And the only people not happy about it are the Grinches that are rooting against the president and this great nation. The naysayers and so-called experts who continue to just be wrong pretty much everything. Kevin Hassett is calling them out and predicting a huge year ahead.
I mean, there are naysayers, but there are also people who are serious economists who say the right thing. Jason Furman, the former CEA chair for President Obama, said this something approximately like this is either a really, really great number or a great number. And so I think that the people who are called the numbers correctly are saying the right thing. But the question for Americans is, like, how do you think about what's going on next? What about next year? And the bottom line is we've got everything lined up to have a great year, a golden age for America.
And I don't know why, David, that is so hard for some people on the left to accept. We're setting up for a good year. That's a good thing for everybody. For those who are rooting against the American economy, they're doing it because they're rooting against this president. And they're rooting against his ideology and his policies as well. I've heard everything from you can't trust the GDP number to the CPI number with the shutdown and everything that we've been experiencing. It's all fake news. But the reality is that the growth is there. Inflation is low. If the job market stays weak, you've got a Fed that's going to be positioned well to cut rates. That will stimulate growth as well. So it seems like we're in a good position, especially if people get those IRS refunds that they're expecting from all of the stuff in the big, beautiful law. I mean, what could go wrong here?
Look, they're not just rooting against the president. They're really rooting against the American people, who are going to be the beneficiaries of successful policies, of successful wage growth, of a GDP year over year that is now 4.3 in the third quarter. Remember, that was going to be the end of it, predicted for, I guess, the 10th time in the last few months. The fact is they're rooting against the American people who need the success. The very people that some in the Democrat Party claim to care about need those tax policies, which will kick in starting in January. Some play out through 2027. And when you break down the permanent provisions in the TCJA, now the one big beautiful bill, when you talk about the difference tax levels from 10 all the way to 36 instead of 39.5%, those percentage points matter. Just like the basis points that the Fed fails to do when they don't cut enough, that matters. And the wage growth, the fact that there are more American-born employees, more people entering the workforce, less foreign workers. That's a problem. We still have a way to go on it. When you look at reduction in federal workers, which is a cost to the taxpayer, and a right sizing of some of these agencies, a lot of them are bloated, and the rise in employment in longer term jobs of construction, types of jobs that last for a long time, that actually means that the community is in play, whether it's a restaurant, a business, a supplier, whether it's wood, aggregate, electrical, trades, carpenter. You start looking at this, you start seeing a real build in the economy, and one that doesn't last and you end the job in a year. There will be some that obviously terminate, but that means that the building is continuing.
Yeah, and what I find particularly interesting is in the olden days, Taylor, when before the left went, hard left and progressive, and you had more moderate Democrats, nobody rooted against the country. Good numbers were good numbers. They were celebrated, whether you were on the right, the left, no matter who was the president. We wanted to see prosperity. We wanted to see growth. Yes. We wanted to see this nation be number one. So what's changed in people's psychology that they have to come out and attack on the left?
I think that's a broader polarization of this country question, Jackie, and I don't think I'm smart enough to answer that. I'm totally with you. Capitalism is the best way for everyone to get richer together. GDP at 4.2, 4.3% is the best way for everyone to grow up the socioeconomic ladder together. I've cited this. They've done studies. When a poor kid grows up in a neighborhood where his neighbor is working versus when the neighbor is not working, that kid has a better chance of entering the workforce and working and moving up the socioeconomic ladder. So I'm super bullish on this. I'm going to do a year in review and a quick preview, but this is fast. Don't worry. Jobless claims we got today have shown 0 increase in layoffs on average this year. Claims in the first 51 weeks of this year are about 226,000. Last year, 223,000. We are on average exactly what we were doing last year in terms of layoffs. Continuing claims, a little bit of a pickup, April to June, tariffy season, didn't love that. It's exactly what happened last year between April and June when there were no tariffs. So is that seasonality? There's nothing different this year in the data relative to last year. And since June, continuing claims have leveled out. So here's the quote I love. Whatever ails net job creation, it is not coming from companies firing people.
Okay.
We are not firing people so far. Another thing I loved, you guys know a deal book. It's like the New York Times, like kind of financial newsletter. They were doing a year in review in pictures. There were about 13 photos recapping the year in review. 9 of those were all related to finance. I loved it. It was tariffs, Fed, Doge, tech CEOs in Washington, cryptocurrency, AI spending spree, deal making, Warner Brothers Discovery, I'm looking at you. I love that. That means that if you look at this year in review, it is capitalism, it's money, it's finance, and it's not profit at any cost. It's profit to help the people who are working at these companies. I think that sets us up well for next year.
And when we look at the employment numbers, I think you bring up a great point. Where we have seen the layoffs is in the government, in a bloated government, not in companies. We've also seen evidence that it's not about AI, eating your lunch just yet, Lou. So when we look at 2026 and we think about what Taylor just laid out for us, we saw strong returns in the stock market. We had a little bit of a bumpy year, Liberation Day, tariffs. It all sort of came full circle. If you believed, if you had, the sort of staying power to stick with the president and say, I do think this administration knows what they're doing. He's got a lot of smart people around him. And it all seems to be working out. I think when you see in the first half of the year, people get those checks from the IRS. And remember, as Taylor always points out, this is not printed money. This is money that people earned. It incentivizes work. That's like a really positive core foundation to keep building on.
Yeah, it's more stimulus. I mean, I think you said it best. The early adopters were rewarded for believing in the president. Now you can be a little bit later of adopter and still join this trend. I mean, I look at, you said at the top, the gas prices, right? Transportation is a hidden tax on everyone. It's not just for road trips. It's on logistics. It's on grocery prices. It's on airlines. Every 10-cent decrease puts about $15 billion back into American pockets. So we're talking about maybe 5 to 7 times that has happened, like the decrease in gas prices. So you got about $100 billion of stimulus coming from that. We've got stimulus from the tax cuts. I just look across the jobless claims. They're actually historically really low. The benchmark we used to look at on Wall Street was under 300,000. So we're well below. Like, I don't know what it is. You asked a very difficult question on the political side. I think it's this. Republicans want to celebrate America's success and capitalism's success. Democrats, they'll tolerate it, but they're not going to make everyone say, hey, this is a good thing.
I think what it really is the stronger the capitalist model is, the more it pokes holes in what they're trying to do. So it's sort of the two agendas are really clashing and butting heads. But Lydia, I want to come to you on the consumer, because you've got a president whose polling numbers are at 50%, which is pretty strong as we go into the new year. Consumer confidence, we keep talking about it. The consumer doesn't feel great. But you know what? The consumer was out spending. The consumer is hitting the road to see family and friends this holiday season. The consumer is holding on. I think that, we look at 4 years that were really difficult, a year that was a little bumpy, but provided us with some hope. And now that hope is about to kick in.
Yeah, the consumer is a little bit nervous, and we learned that a little bit about that yesterday, but there's a lot of reason to be really optimistic about going forward. That's assuming that the consumer is not listening to folks on the left like Senator Elizabeth Warren. And I think that's where some of this trepidation is coming from. Senator Elizabeth Warren yesterday was tweeting about how the consumer is spending less this retail holiday season. And we know from the data that's now pouring in that we're going to talk throughout this show about, that's just not true. The consumer is spending. It's a smart consumer that's looking for a deal, but it is one that is looking to spend a buck to have a great holiday season. And I think the other thing, too, the other point I wanted to make is that when you kind of get down into the details and you look at the inflation picture, which is improving across the country. But there are some states, according to our Fox Business report, that are doing better than others, markedly better than others. And which states are they? They're the red states. They're the states that are Republican-led. They're the states that are not being led by Senator Elizabeth Warren and the like. And that is also reflected by the gas prices. And I say that all of that to say, yes, we do have national politics at play that are really important in shaping the economy and leading the future. But state politics also are so important when it comes to regulation and taxing. And I think that, our viewers are very smart in paying attention, but it also needs, everyone needs to kind of pay attention, not listen to Senator Warren's and her tweets that are being issued, and more the data in their pocketbook and asking questions at the state level. Why are gas prices still over $4 a gallon in California when they can be around $2.50 in Texas?
Yeah, I think
because Gavin Newsom wants it that way.
Yeah, you put a fine point on that. The reason that inflation is staying a little bit higher than target is because of structural and regulatory problems. You look at it, it's real estate, it's energy, it's healthcare costs. It's not demand driven that's pushing prices higher. And so it's not a surprise to see in red states that have a better regulatory environment and a grasp on what works for economics and what works for capitalism that the prices are coming down.
I think the White House.
I want to ask you a question because I think this is a real problem, and it goes back to my political point, which is that the more we become polarized as a nation, the more states separate this way. We talk about it in AI as the president wants to potentially put some rules out there with federal regulations so states can't muscle their way in and hold the plan back from moving forward. What happens when we become so polarized and you can't blanket cover everything in federal law? People move out, right? Ideologically, people move where they're treated better and their money is treated better. But that also creates problems to me that are bigger than sort of what we are dealing with right now. I think
Look, that's the constant struggle between federalism and the federal government. And it goes along with what you were saying. So as usual, you're ahead of me anyway with your question, because they tie together. One, the White House can do a better job and a more effective job if they push on inflation reduced to regions and states. There is a difference there, red states, blue states, regions, types of economies. That goes to your point. How do we do this? You need a minimum set of standards for AI. And it is difficult to navigate through that. You can't have 50 states with 37 different sets of regulations. That will actually hamper innovation because a company does not work within a political or geographic border. AI is bigger than that border. So it's important to set a minimum set of standards without the arm and weight of government because, again, how do you hamper innovation in some of these more autocratic regimes or in a China is you simply tell everybody this is the only way you can operate. So the next guy or girl in a garage with an idea and a table full of computers can't come up with that next great idea or the tool they want to create or something like that. So from the AI perspective, that's the approach. Minimum set of standards. There has to be that. It works well at the federal level, but it doesn't hamper states who want to be responsible and say, okay, do we need to look at some of the things that we do within the state on regulation? And most of it has to be around protecting the ability to innovate. You can't catch everything up front. You just simply can't. Government can't do it. No one can do it. So you're going to have to deal with some things as they happen. That's also the reality and a pragmatism of an administration that sees things as they are, not as they would necessarily want them to be. First, see it for what it is, then work to what it needs to be.
And don't put a moratorium on it like Bernie Sanders wants to immediately and stop progression, which automatically means we lose the race.
Let's stay with tech for a second and take a look at shares of Intel because there was some news this morning that said.
Yes, and I don't think it's great news. Shares are still down about 1%. Now, this is all according to a Reuters report, but they are saying that NVIDIA had been testing some of their chip manufacturing on Intel's 18A process. They've now reportedly stopped doing that. So that would be a bad thing for Intel if NVIDIA was testing that out and then saying, okay, never mind, we're not going to move forward with that plan. So we'll have to see how this shakes out. But again, not great news for Intel this morning.
Yeah, I'd say trust but verify here a little bit because we've seen a lot of reporting about these tech deals falling through a data center and then it comes back and the company say, hey, this isn't true. Let's see where the business goes out. I mean, I was wrong about Intel. Stock's up about 80% this year.
Yeah.
Yes.
Strong rebound. It's okay to be wrong sometimes.
After it was backed by the full faith and credit.
We didn't say why.
Okay.